Welcome to this presentation of 3 ways to simplify your trading. This is a Specialist Trading Weekly Stock, Emini, and Forex lesson. Hello everyone and welcome. My name is Primo. I am the president and founder of Specialist Trading. And for those of you who are familiar with my presentations and who have attended them in the past, you'll know that everything we focus on is on keeping things as simple as possible. We feel this is the only way you'll achieve true consistency in your trading. So I'm going to show you some real basic things on how to keep your trading as simple as possible today. But before we begin, as always, I ask that you please take a moment to view our disclaimer. I'm going to show you some performance results from strategies that use our simple techniques, but please remember that we can in no way guarantee that any of these results will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's Stock, E-mini, and Forex lesson. All right, now I just want to start off by saying when I first began trading on the floor of the stock exchange, I had a very difficult time. I make no secret about that. For those of you who have attended my presentations before, know that my first year of trading was very difficult. I probably traded the way 99% of all traders do. I tried to pick tops and bottoms. I was looking at far too many indicators on my screen. I was listening to far too many outside sources, too many trading gurus, subscribing to many newsletters, and reading too many periodicals. And so my trading really, rather than become successful, was doing the opposite. I was having a very difficult time and just basically treading water. It wasn't until I met a few elite floor traders on the floor, these were actually specialists, who turned my way of trading around by turning my way of thinking around. And one of the first things they taught me, which led ultimately for me to become a consistent trader, was, Steve, to keep things as simple as possible, to remove what they called the useless noise that I was depending far too much on. In fact, one of the first statements that my mentor said to me was, Steve, it's the easiest thing in the world to complicate your trading. Basically, anyone can do that. But it's the most difficult thing in the world to simplify. And after really thinking about that, this statement really hit home for me, because I realized that anyone, regardless of how long you've been trading, if you've been trading for one day or for 10 or 20 or 30 years, anyone can complicate their trading. You can add on a ton of indicators, you can listen to a ton of different people, you can be in tons of chat rooms. It doesn't really take a lot of character and a lot of discipline to do that, but what really takes character and discipline is to simplify your trading, is to release and let go of all the what they labeled as useless noise that for some reason we've been taught or over time come to rely upon, and we think that these things will make us successful. Once you have enough courage to let go of these things, that's really when you'll start to see the success and the consistency in your trading. So this is what was taught to me, and this is what ultimately turned my way of trading around, and this is what we try and instill and teach to all of our members at Specialist Trading. So let's talk about the 3 things basically that can simplify your trading. If you apply these, or actually if you use these with your trading, I really believe that you'll start to see that consistency. So the first thing we want to do is trade only one time frame at a time. All right? Now, far too many traders are overcomplicating their trading by looking at so many different time frames. You're trading an hourly chart here, a daily bar here, you're looking at 5-minute charts here, all in different markets. What you really want to do is just look at 1 or 2 specific different charts, different things you're trading, and use only one time frame. And this also means not to overcomplicate your trading by looking at a higher time frame to confirm the lower direction of the smaller time frame. In other words, I know a lot of traders like to look at a daily bar chart, see what the trend is in that particular time frame, and then use that to determine the trend of the lower time frame. Well, I know that a lot of people swear by this particular technique, but I have found no consistency using this over the past 36 years of my trading. So I really just focus on looking at the one time frame I'm trading and getting all my signals generated from that. So remember, try to keep things simple rather than looking at, have one screen have a 5-minute chart, another have a 1,000 tick bar chart, another is an hourly chart. Trade only one time frame at a time. All right. Rule number 2, trade only one indicator at a time. Look at your chart right now, and if you have tons of rows of different indicators below the actual chart, you're making your trading far too complicated than it has to be. All the strategies we have at Specialist Trading have at most 2 indicators, all right? And really one isn't even an indicator. One is just something to discern whether you should be going long or short. But in terms of an actual indicator, such as an RSI, such as an ADX indicator, such as anything, an oscillator, only trade with one. Trade only one indicator at a time. If you're using more than one indicator, you're making your trading far too complicated. So look at your screen right now. See how many indicators you have below. If it's more than one, you're looking at way too many indicators. Keep it as simple as possible. And lastly, rule number 3, listen only to the chart in front of you. All right, now people will say, well, what exactly does this mean, listen to the chart in front of you? What do we usually listen to when we try to generate signals or get information from trading? We listen to the TV commentator. We listen to what they're saying in the chat room that we subscribe to. We listen to the newsletters or what someone is saying in a periodical or a magazine. There are far too many outside sources telling us what we should be doing. We listen to the economic reports, to what the news is saying, to what the government releases are coming out with, or what the earnings reports are. There's far too much information that we're depending and relying upon to generate our signals. We're listening to this, which once again was labeled as useless noise. And I know firsthand because I used to listen to all of this. I used to rely and depend on these outside sources to come up with ideas in which direction I should trade, what I should be buying, what I should be selling. Listen to only one thing, and that's the most important thing, and that's the chart in front of you. If the chart, by using our simple basic techniques, is telling you to go long, then simply go long. If the chart is telling you to go short, then go short. That's all you need to do, rather than listening to a chat room, listening to the commentators on TV and so forth. Don't rely on economic news to tell you what to do. Don't rely on chat rooms or trading rooms. Rely only on one thing, and that's listening only to the chart in front of you. Now, I know a lot of people will say, well, how do I do that? Well, that's what we teach at Specialist Trading. We teach you how to listen, and once you understand what the market is telling you, you'll know that the most important thing is to be in sync with the market, not to be in sync with what some economic report is or what some trading guru is saying, but to only be in sync with the most important thing, and that's the market in front of you. Whether you're looking at a 5-minute chart of the Emini, a monthly chart of the Forex, or whether you're looking at a daily bar of Apple, does not matter. Just to be in sync with that particular chart you're looking at will make all the difference in the world. Now let me show you how we applied all these 3 different simple techniques to all of our strategies and some current trades that we took that all of our members would have taken as well. Let's start off with stocks. Remember, the first thing we wanted to talk about was to really keep things simple, and we apply that with strategy number 4. So let's firstly talk about how this applies with stocks using strategy number 4. This is probably our most popular and basically one of the most I would say consistent strategies for trading stocks. It's strategy number 4 because it really works well with daily bars in the stock market. So if we're talking about only trading one time frame, we're only looking at daily bars here using strategy number 4, going all the way back to October of last year up until a current chart right now of Apple. We see here that by simply applying this simple strategy in one time frame, daily bars, look at the nice signals we would have had to go short. Almost each signal we had in Apple was to go short at the very top of that little pullback. And we weren't concerned with what the earnings were. We weren't concerned with what news was coming out in Apple. We weren't concerned with trying to pick a bottom. We were just concerned in listening to what the market had told us. And the market says Apple is still going lower. So listen to what the market is saying and use this one time frame to go short. And you see we had 3 great signals using strategy number 4. How about the E-mini markets? Okay, what if you say, well, Steve, I don't really trade stocks. I trade the E-mini on an intraday basis. How does this apply? Or sometimes I'll hold the E-mini overnight. Okay, well, great. We have strategies that work well, just as well using these same simple techniques. In fact, our premier strategy for trading the E-mini is strategy number 7. So when we talked about only trading one time frame, and then we want to talk about using only one indicator. Well, guess what? Here was a signal we had at the very end of the year, just a couple of weeks ago, to go long the E-mini. We didn't listen to any outside source, any news. We didn't worry about looking at different time frames. We just saw that on a daily time frame, strategy number 7 was saying to go long the E-mini. And how many indicators are we using? Well, there are actually no indicators with strategy number 7. All strategy number 7 does is look for a pattern. We look for a specific pattern, and on the 28th of December of last year, we saw this pattern on a daily bar chart. So we said, it's time to go long the E-mini. All of our members were notified the night before. Had you taken the signal, you would have roughly made about 50 points. That's about $2,500 per contract trading the E-mini using absolutely no indicators at all. And then lastly, let's say you're a Forex trader. Let's say, well, Steve, I don't trade stocks. I don't trade the Emini. I'm a Forex trader. Okay, well, let's keep things simple once again, transferring all that information over onto the Forex using our premier strategy for that, which is strategy number 5. Once again, this does not listen to any outside sources. It does not use an indicator. All it does is look for a specific pattern in the Forex markets. Now, if we look for that pattern here without any indicators, without involved in any chat rooms and any economic reports about what's going on in the world currency markets, we see here that at the beginning of December, this particular pattern in strategy number 5 for Forex gave a buy signal in the dollar-yen. So all of our members were notified the night before to enter long into the dollar-yen, just looking at this very simple technique. And you can see here that you would have had a really nice run-up to the upside in the dollar-yen far before any news came out, far before any indicator told you to get long. All right, so let's review here in closing. Remember, we want to keep things as simple as possible. As my mentors taught to me, I try to teach and instill this into all my students as well as your attendees today for coming to this presentation, is to keep things as simple as possible. Remember, it's the easiest thing in the world for anyone to complicate your trading. Anyone can do that, but it's the most difficult thing. It takes the most character to simplify your trading. Now, you just saw 3 great examples of actual real-world trades that were taken by all of our members and were alerted the night before by holding on to these 3 simple techniques. Remember, we only want to trade one time frame at a time. You don't want to be spinning your wheels looking at a 5-minute chart here, an hourly chart here, a daily or a monthly chart here, all with different markets, all in different time frames. Stick with trading in the beginning one time frame. Okay? Secondly, trade with only one indicator. We just saw these 3 great examples here. Only one of them used an indicator. The rest of them were just looking for a particular pattern. So there were basically hardly any indicators looking at these great techniques we just saw, these great trade examples. And then lastly, and the most important thing, if I can teach you one thing, it's listen only to the one thing that's the most important, and that's the chart in front of you. All right, we spend and waste so much time listening to outside sources. Once again, for some reason, we've been made to believe that these outside sources, either trading rooms or chat rooms or TV commentators or periodicals or economic reports, those are the things that will make us successful. But in our opinion, it couldn't be any further from the truth. These are actually the things that get in the way of your success by making your trading far too complicated. So only listen to one thing, that's the chart in front of you. If you don't know how to listen to what the chart is telling you, please, I urge you to become a member of Specialist Trading, because this is what we teach. We teach you how to listen to what the market is telling you. Okay? We teach you how to trade these strategies. We advise all of our members to paper trade first, but then ultimately we feel this will give you the specialist edge, which is ultimately trading that leads to consistency. In closing, I ask that you take one last look at our disclaimer. I showed you some performance results using these 3 simple techniques, but please remember that we can in no way guarantee that any of these results will be repeated in the future. Once again, thank you so much for attending. We hope to see you next week. Have a great weekend, and best of luck trading. Bye-bye.